Thank you for tuning in to another edition of the Vulcan Report. I just wanted to do a quick video here. As you can see, as I mentioned yesterday, some of you had asked me what I thought would happen today. What's happening today is exactly as I told you. Basically a dead cat bounce, profit taking ahead of the weekends. People can go to the bars and get drunk. Really not a whole lot to see here. Really not a whole lot to talk about. We're just reacting to a low that we hit. Sort of a interim short-term support, if you will, only to set up the next short for next week, possibly even Monday. Another thing you should note, the chart you're looking at is the mini Dow futures, and you'll notice that right now it's profit-taking. It's not really a lot of buying per se. The market will be up a lot higher than it is now. This is just a few people, taking profit. Anyway, I also wanted to point out that when you look at the diamonds and the spiders and the QQQ is only up 34 cents, while the spider and the diamonds are up over $1. That's a big disparity. The smart money is saying we don't buy it. We know that this rally today is not real. Also, Goldman Sachs is still down very heavy, only a little bit off of $1 off of its low of the day. Not really what you would call a recovery or a rally. Also, the spin with the news today was hilarious with the GDP. Those of you who don't know, that GDP number sucked, okay? They spent it to make it seem like it was better than expected. But sorry, that number sucked, man. It was nothing tight about it. The U.S. economy grew more sluggish than initially estimated in the second quarter. Gross domestic product rose at a seasonably adjusted annual rate of 1.6%, less than the 2.4% growth initially estimated. So economists expected growth to be revised lower to 1.3%. In the first quarter, the economy expanded 3.7%. Sorry. That's massaging of numbers, okay? Adjusting the numbers to make them look a little bit better than what they really are, but the numbers still sucked, all right? The economy is not in a recovery, but as long as they can make you think it is and keep the Dow closing above 10,000, you'll think, all right, we're on the road to recovery. Things are not as bad as people say they are. No, you're right. Things are not as bad as people say they are. They're worse. So that's all I got to say on that. Anyway, you got the report. I put it out last night, the list. So go through it when you get a chance. Basically, the things highlighted in green are the buy signals for the day. The things highlighted in red are the sell signals for the day. The things highlighted in yellow are your potential post-wave candidates. You're placing breakout orders. And then the thing at the bottom that's not highlighted at all is a bot pickup. Basically what I did was I realized that I was getting a lot of questions, and sometimes it's hard to make videos, during the trading session because I'm trying to focus on what I'm doing. And what happens is people ask me, what's going on, and there are times where I wanna do a video and show you where there's manipulation coming into the market or things like that. So I just went ahead and cut to the chase and just I built an algorithm that picks up the order flow. So you're going to start seeing that now. Excuse me. So that way I don't have to try to stop and explain everything all the time. You'll have it right in front of you. So let me just go through it real quick for you so you can see what I'm talking about and understand it, hopefully. All right, this is it. First of all, what you have here is the printout. This printout is of the system. It's giving you the signals for the next day. I do my updates after the market closes. All right, so what you have here is several different categories of things that you're watching for the next trading session. I like to give out the signals 24 hours in advance because it helps to build the credibility of the system so that you can see that I know what I'm talking about. Now, remember too, with this system, there are going to be a lot of times where you're not going to get fills and stuff, but that's cool because you don't want to be in the market on the wrong side anyway. So if you don't get a fill, it's not a big deal. You just want to be available. You want to be in the market when the market's doing what it needs to do for you. And you don't want to be in the market when it's not going to do what it needs to be doing for you. All right? So, here we go. Excuse me. First category, security's name. I try to give the ticker symbol ahead of the name so you don't have to scroll all the way over to find the ticker symbol. So, for example, DBA commodity ETF. The first thing you have here is the pulse wave resistance. That price right there, 26.42, is where you place your ticket to actually buy the security at that price. Because it's a possible pulse wave candidate, and you don't know which way it's going to break, you always want to place the ticket in the direction of the overall trend. And to find the trend, you scroll over here. You find the word uptrend. All right? If there's a 1 there, it means it's in an uptrend. If it's a 0, it's a downtrend or bear market. The market depth indicator lets you know takes all the fundamental analysis and all the news and all the insider activity, and it crunches that for you. And if it's a 0, that means it's negative or bearish, and if there's a 1, then it's positive. Okay, that's your bid. It takes into account the bid to ask ratio, and it takes into account the commitment of traders reports, and looks at the options and the VIX and all that stuff, and lets you know where people are actually placing their money regardless of what they say. So that's what that indicator for. It kind of confirms trends. So like this is at a 0, but this is at a 1, which means the market depth in here is negative, whereas the trend is bullish. So either it's a matter of time before this trend is about to change in the security, or vice versa. So again, this is the DBA. Okay. More likely than not, the fundamentals are going to catch up to the technicals, and they'll become bullish also. Alright, you look over here, see the PPT, HFTL, that's the punch protection team and high frequency trading bots. On the long side, lets you know if there's insider activity and if the bots are at work on the long side of the market, regardless of whether they cancel the orders or they try to manipulate order flow or not. It's still, the algorithm will still pick that up. It will post it and tell you for the next day if that activity was picked up during that last trading session or not. And then the next column is on the short side, high frequency trading on the short side. Okay, and then you have your ticker symbol. So any kind of market manipulation, the algorithm is going to pick it up in the trading session. All the news and fundamental analysis and all that stuff. The bid to ask, market depth, the ratios, the open interest, all that stuff. Volatility, that's the market depth indicator right there. So I added these three, the market depth, the PPT, and the high frequency trading bots, all right there for you. All right, so there you go. Of course, positive and negative swing VIX. Here's how this works. If you get a 1 in this column and the trend is up, it's telling you that you have a positive swing VIX, and you should place those buy orders to go along this market. Okay. Likewise, if the downtrend is, if it's a downtrend is negative, you have a 0 here, and if you got a 1 here, again, it's telling you that you should prepare to short this particular security because it's now set up for the next leg down. So that's how that works. If it looks at overbought and oversold conditions and things like that, swing VIX is pretty powerful. So it lets you know when those swings are coming in, possibly into that security. All right, and then of course the sell signal, self-explanatory. It's like the breakout long signal. If there's a buy for the security and it's in an uptrend, you're going to get that. If it's in a downtrend, you'll get this signal when the market is possibly ready to turn. So it actually is pretty accurate at picking bottoms in bear markets and picking bottoms in bull markets. And sell signal likewise is good at picking tops in bull markets and tops in bear markets. So it's really good at doing that. So that's pretty much it on how to read this thing. So you had the printout yesterday. You see what's on the list here. You want to keep it simple. You don't have to watch a million different things, really, to be quite honest with you. Only thing you really need to watch is this TLT, which is the bonds. Of course, all the Forex ones that say Forex on them, you want to watch those. As far as the commodities, you want to watch the DBA, of course. You want to watch, of course, the gold and silver spot, which is considered Forex, because most Forex platforms offer that. The other thing you want to watch on here is your SPY, of course, and your QQQ and your DIA, which is your diamonds, if you get something on that. And that's pretty much really all you need to follow. Everything else is just extra stuff in case the core things that we trade, which is the stock indexes, if we don't have signals on those, you can always look to find something else to pick up. And these are here your Forex currencies on the ETF side. So you can still trade Forex without trading Forex. All right. So that's pretty much all that is. So I just want to encourage you all, and have a great weekend. And remember, take what you can, give nothing back. Regardless of what the market does today, it is setting up nicely for new shorts. So if you're holding shorts, make sure you got your stops in place correctly. If you're not, then you could possibly use today's as a proxy for Monday to set up some short positions. One last note on stops. See the buy stop and the sell stop? All right, if you're shorting, you want to enter in on this sell stop number, okay, in a down market. Likewise, in a bull market, you enter your buys on this right here. If you're selling, in a down market, in a bull market, chances are you're going to short the pulse wave support, because that's the major support that's going to give you your money. Likewise, in a bull market, the pulse wave resistance also works. So these are your major support and resistance areas that you use, and that you use them for your stops. So like on this one, if you're going long today on this particular security here, which is the GLD, you would buy at the 123.07 and put your stop at the pulse wave support, which is at 118.71. Okay, that's how you play that. Likewise, if you were going to sell it today, if it was in a downtrend, you would sell it at 120.37 and put your stop loss here at 120.99. That's pretty much the way that works, okay? So keep the comments and questions coming. I do my best to continue to answer as many questions as possible. Just be encouraged. And remember, take what you can and give nothing back.